Hi everybody, great to have you with us again. I'm back talking about finance tips, all things finance, and I'm joined today by Orla Shevlin and Tom Attlee, who are both brokers with Trussle, who we are working with throughout this series. Orla, can I start with you, because I just want to talk about the application tips. How does somebody prepare for their mortgage application? Because it's a big thing to get right, and it's a complicated thing, isn't it?
Yeah, definitely. So I would say kind of keyword there is prepare. So I would recommend doing kind of a little personal audit, get to know your finances, get to know kind of your income, your outgoings. So essentially have a look at your bank statements. Does everything make sense? Mm-hmm. If you're self-employed, are all your accounts in order? So have you spoken to your accountant? Have you submitted your latest tax returns, tax calculations?
How long do they look back at if you're self-employed?
So if you're self-employed, if you're set up as a limited company, lenders are wanting 2 years' worth of company accounts. Yeah. Some 3, but the majority will be 2. Mm-hmm. Sole trader, again, usually 2 years' worth of tax calculations and tax year overviews. If you're a contractor, which tends to be quite popular at the moment, a lot of lenders can potentially use your latest contract, but previous experience within kind of similar contracting roles may be needed, or a similar field of work.
And what other things do you need to prepare? I found it really real painful in the past having to do loads of ID checks. You've always got to do ID checks now, but I guess people have got those up to speed, have they?
Well, yeah, make sure your ID is in date and that it's got correct name. So sometimes we do have... Some people have 2 middle names. Sometimes on your driving licence, they may not be able to fit them all in. So just make sure you've got valid ID in date, ready to submit your application with. Because, yes, we don't meet our clients face-to-face anymore, but we'll still need to do electronic ID checks.
A question, if I may, on that topic, and it's from personal experience. I recently, wasn't to do with the mortgage, but I recently had to do something for ID, and I submitted they wanted a council tax bill. So I sent them the council tax bill, thought no more about it. When it came back sometime later that it was too far out of date and there should have been a more up-to-date council tax bill. What happens if somebody makes a sort of clerical error like that in their application, in their mortgage application?
Well, that's the benefit of using a broker. So when we ask for all these documents, we check through those, make sure we've got everything we need before we submit your application to the lender. Yep. And as a broker, that's essentially what we're paid by the lender to do, is to package the case nicely before we submit it to them, because our role is really to save them time and money. So that's kind of the biggest part of our job, that makes sure we've got your application ready for them.
Orla, I thank you for pointing that out. I've never actually thought of that before, because you save your customers, the borrowers, time and money, but actually you're also sitting in the middle, making it much easier for the lenders, the banks and the building societies, because you've packaged it properly and how they want to receive it. So you save them time and money. Yeah,
exactly. So they've got... kind of a lot of the time now, a lot of banks only have one mortgage advisor, sometimes for the whole region. Really? So it's kind of less rent on a bank, or
absolutely.
A lot of branches are closing at the moment. Yeah. So if they've got applications coming in all the time from different brokers around the country, that's in essence quite easy business for them. They don't need to be meeting loads of clients face to face. We do that for them.
I just wanted to take a moment in the middle of proceedings here to say a very big thank you to our friends at Trussle.com. They are the sponsors of the whole series. Trussle were the first online mortgage broker, and they've indeed since been voted the best mortgage broker. Not just online, but the best mortgage broker. They are a hassle-free, fee-free way of getting a mortgage, and indeed they are the only broker with a 5-day speed promise. Somebody's got themselves prepared, they've done their ID, they've got their accounts up to speed, they've got their tax returns fully completed. What else?
I would say good idea would be to speak to a broker early on. So you know your circumstances, you know what your income is, you know what your outgoings are. In terms of your outgoings, I'll just make sure that you've thought of everything. So when you're looking at your pay slips, do you have any kind of share contributions, childcare vouchers, student loan, things like that? You need to let your broker know, because they are deductions that lenders will take into account. So when you speak to a broker and you give them all the information, try and be in honest as possible.
Okay.
Especially when it comes to things like your credit scoring.
What happens if you've sort of just forgotten that you have a credit card with a couple of grand on it? What happens if you just forget about that for a minute?
The lender will pick that up. So they will do a credit search. If anything hasn't been declared, if it's just an error on your part or you've decided not to disclose that for some reason, when the moment we submit your application, the lender will pick up that credit card and they'll then come to me, what's that? I'll then have to come back to the borrower, ask them what that is, and it potentially can lead to a slight delay in your application.
Why? Because the application goes back to the start?
Any queries, it kind of goes to the back of the queue again with the lender.
Right. Which I guess where you guys as brokers really help because you make sure it's filled in properly to start with.
So we're trying to fully package that application as much as we can, essentially.
Yeah. So if I'm reading it correctly, every time you make a change on the application, it just goes to the back of the list?
Yeah. So ideally, you want to avoid kind of chopping and changing your application. So, for example, when you're submitting your application, you want to know how much deposit you have.
Yeah.
If kind of your mum and dad contact you, actually, we could give you 10 grand more towards this gift. Ideally, you want to be knowing things like that before you submit your application to the lender.
Yeah.
Things can be amended, but then it's an extra delay. It's passing it back to, so all lenders have people sat there looking at your applications known as underwriters. So then it will go back to them and they'll just have to re-review your application. Again, similar if you decide you don't like your solicitor, you want to change your solicitor, contacting the lender again and making that change. So,
Tom, can I come to you about levels of deposit?
Yeah.
Because there's lots of chat over the last few years. I guess it's post-financial crisis, isn't it, where the obligation was on banks not to lend too much, and they wanted to go through bigger checks. They had to go through bigger checks, and rightly so too. But they also started to increase levels of deposit. Where are we at now? What's a decent deposit?
A decent deposit would be anywhere, probably more than 10%. So you'd start to get some really competitive interest rates with a 15% deposit. There are lenders that will lend with a 5% deposit.
Okay.
You just got to remember, the smaller your deposit, the higher risk you represent to the bank or building society, and therefore they'll do additional checks. They'll want to know more information. The threshold that you have to meet on the credit score will be higher. The lower your deposit is, and the interest rate that you pay will be higher.
So the actual interest rate would alter whether you had a 5% deposit or a 15% deposit?
Yeah, the interest rate on a 5% deposit would be much higher, sometimes even double than it would be on a 15%.
Because just the risk is higher to the bank?
Yeah, the bank look at, okay, if you don't pay your mortgage, we have to sell your house. If you've got a small deposit, they might not get the money back at repossession. It's not a nice thing to think about, but so the bigger deposit you've got, you'll find that it should just smoothly fly through with the lender. I
mean, banks are in business to lend money. That's what they want to do. But equally, they will be assessing risk versus return.
Exactly, yeah.
Can we talk generally about the benefits of using a broker at the application process? And I know Trussle is very focused on online, and that's the way you start. But benefits of using a broker generally?
Generally, you've got a person on your side. You've got a person that is going to be sat on hold for you so you can get on your day at work.
Fill in all the forms. Yeah,
so they are saving you. Again, we'll always go back to the time factor and also stress. You don't want to be chasing up the lender when you could just shoot your broker an email or any update. And also, especially, we've got contacts at each lender. So they're known as our business development managers. Essentially, if we're having an issue with your application for any reason, then we can escalate and kind of get back to me as soon as possible. What's the issue here? But at Trussle, we have kind of a case manager team. So their sole role is to kind of deal with your application once it's submitted. So they're the ones chasing up the lender, the surveyor, kind of your solicitor as well, just making sure everything goes as smoothly and quickly as possible.
So I suppose if you call up from Trussle, call up a lender, and you've got 100 cases going with that lender, the chances of them taking the call and actually doing what you're asking are rather higher than if I call up with my one loan that I went directly. I probably do get put on hold.
Definitely.
To put it politely.
So brokers will have a separate phone line compared to kind of someone applying direct.
Yeah.
And also, as well as kind of the standard mortgage lender phone line, as I said, we've got a direct contact there. So should we ever have any issues with any applications, we can always go to them and they can assist.
I think it's important to note, for someone like Orla, for example, have submitted 30, 40 mortgage applications every month. As an individual, you're probably only going to do a mortgage 4 or 5 times in your life. So we've seen it all, we've done it all. We can anticipate those questions before they even get asked by the bank. So, we will ask a number of questions before we've even submitted the application to the bank. So a lot of the back and forth, the customer may not even know it's happening because we're already in a position to answer those questions.
And I suppose that each individual bank likes things in a different way and will ask different questions.
Yeah, and we can anticipate what those questions will be. We know Barclays will like to know about this, but Santander like to know about this.
Yeah, other banks are available.
Exactly, all of them. The 90, we use 90. But we can anticipate those. And another thing is the broker will put you to the most appropriate bank for your circumstances. It might not be the one that's the lowest interest rate or the lowest amount of fees, but it could be because of your particular scenario, moving to being a fixed term contract or being self-employed, right? Well, we know that the X bank is the best one for you. Yeah. So it will speed the process.
There are so many variables. Whenever I've mortgaged or remortgaged, there are so many variables, and they get sold on the kind of headline of the deal. But actually, the arrangement fee, whether you're paying for the valuation or not, the length of term, it's not. There's a lot to consider, and every situation is different.
Definitely, and the criteria, I think, trumps all of that.
Yeah. Any deal or products, you might not be able to get it. Time in the UK, your job role, are we needing to use benefits, all things like that. And biggest factor, affordability, is that lender able to give you the mortgage amount that you're needing.
And tell me about how it works in the money markets. When a mortgage lender comes out and says, right, this is our rate, how long might that be around for? And how does somebody, if they're applying for that rate, how do they secure it when it takes, they may not have found the property yet, they haven't had the property surveyed. That process can take some time. How does somebody actually secure a headline rate that they really want?
So you can only secure a rate once your application's been fully submitted to the lender.
Okay.
So lenders do change their rates.
Sorry. So I've found a property. With your help, I've chosen a product. I've submitted my application. If that is approved, that's my rate. Is that what you're saying?
Yeah. So once your application is submitted, even if it's not approved just yet, you can secure that rate once your application is in with the lender.
Even though that rate may only be around for a couple of weeks? Yeah.
That's the benefit of getting your documents right first time, getting everything up to scratch, because your mortgage advisor can submit the case straight away. Yeah. You also get the best of both worlds. If you submit an application on the 1st of March and then the lender increases rates on the 15th of March, you've got that rate. If they move rates down, a good broker can apply for the new rate. Yes, it'll take a bit of time, you'll get a new offer, but you can always get the lowest rate. So you get the best of both worlds in that.
And tell me if I'm wrong, but these rates do fluctuate a lot, don't they, depending on actually who really wants to lend money this week and who's got plenty of business. So
that makes our job very difficult. So it's all very much dependent on what's happening in the world. Kind of COVID times, rates were changing all the time, and they will change every couple of days. So I can give someone a recommendation, they're getting their documents together, but if they take a few days to get them together, once they're with me and I've checked through them, rate could have been pulled. But that way I can come back to you with a new recommendation. Might not be as good as the rate as we were looking at before, but I'll just always give kind of the most competitive and similar product that we were looking at last time.
I think interest rates have changed this week every day when we've been in the office, and we've been working till 8, 9 o'clock. There is a dead cut-off. Your application needs to be submitted by 8 p.m. this evening. So we're all frantically working up until that point to get applications submitted. We would get a couple of days' notice, so we can tell you your rate's going to change by tomorrow, so I need your documents by this time. It's another thing that the bank won't tell you if you go directly, potentially.
This is great stuff, Orla and Tom. Thank you. But we've slightly got off the topic. But it's really interesting stuff. Can I just bring you back to the application process and key things? I want to talk about credit scores, and what's involved, how it gets assessed, what should people do, any kind of red flags that they should be aware of.
get your credit score before you can log on to a number of different credit providers, Experian, Equifax, ClearScore. You can have free trial. Some will do it for free. But get a copy, get a full PDF copy. It shows you everything that you've ever done in the last. It's quite scary, but it's also interesting.
Speak for yourself.
Yeah, exactly. Well, yeah, maybe. Shouldn't say that.
What's Tom been up to?
But yeah, every missed payment or everywhere you've lived, everyone you've ever had a financial association with, because knowledge is power, and if you know that this is written down somewhere, the bank's going to find it, so you need to have a discussion with your broker beforehand. You might think, I won't mention that, but what that involves is your broker then giving you the wrong recommendation, submitting your application to the wrong lender, which will put a black mark against your name, and then we have to start again from scratch. So be honest with your broker, because we've seen and done everything, so we will be able to find you the most appropriate lender for your circumstances.
How does somebody improve their credit score if they download it and they don't like it, or they think they can change it, or it shouldn't be right? How do they improve it?
So I would look at it first. Is everything correct? Could potentially anything be disputed? So did you have a late payment that necessarily wasn't your fault? Say if you set up a direct debit for a credit card, but they didn't take the payment. Is it everything registered to the same name? So straight away, you could be picking up commitments that have been missed out, that you've been keeping up and you've been making payments on. So for example, Thomas, is everything registered under the name Thomas when that's the name that's on your passport? So that can make a massive difference.
Okay.
There will be sites such as Experian and Equifax, and there will be little tips as to how you can improve your credit rating. Biggest factor, adding yourself to the electoral roll. That will take a little time to update, but when you're added, it increases your credit rating just because the lender has a better picture of you, because they know where you're living, and you may have taken out additional credit commitments to that address. So again, that will be picked up by them. You can also link your bank accounts. I know you can go onto Experian, link your bank accounts to your Experian account. Again, that's just a bigger picture that the lender's getting of you, and so it can increase your credit score further.
There's a lot of 0% credit cards out there, and sometimes people do just have rolling balances on credit cards. If you pay it off every month for air miles or Marks and Spencer's points, that's absolutely fine. But if you are keeping quite big balances on credit cards, but you can afford to pay them off, I would say a month or so before you make your mortgage application, just pay off as much of the debt as you possibly can, because that shows to a lender that you're credit worthy, that you can afford. You're on top of things, and
Let's talk about debt, because lots of people carry debt every month. It's a way of life. So you're not saying that don't have any debt when you apply for a mortgage, but what you're saying is just be in control of it and be honest about it.
Absolutely, be honest. Yeah, that's the first thing, because they're
going to find out about it anyway.
A lot of lenders have debt to income ratio. Okay. So they're saying they're looking at the amount of debt compared to what you're earning. And they generally will never want your debt to be more than your annual income.
Funny that.
It's just for them to see that you can manage those commitments. You don't want to be seen to be overcommitting yourself.
Yes.
Because at the end of the day, they want their mortgage paid every month. Yes. And don't want to repossess your house.
The general rule of thumb, though, if you have debt, pay off as much as you can before you start this process, because it'll improve your credit score. Then you'll get a better mortgage.
Absolutely.
It won't reflect in your credit report straight away. I would say allow a little time for your credit report to update. Usually it updates every month. So if you've made all these payments on your credit commitments, you might not see the effect of it straight away.
Okay. Orla and Tom, thank you for coming along today. Really appreciate it. Thank you to everyone at Trussle for supporting this podcast. It's great stuff. I was going to say it's fascinating. It's not absolutely gripping, but it is really important stuff. And it's a bit of a minefield. So we really appreciate your kind of honesty and openness with our listeners, helping them through. Thank you so much. Good to see you.
Thank you.
Thank you.
A few words of warning. Your home may be repossessed if you don't keep up repayments on your mortgage. You may have to pay an early repayment charge to your existing lender if you remortgage. Individual savings may vary, and terms and conditions can be found at Trussle.com.